Nvidia is up by 260% in the last year. So the question is it too late to buy, or can we still catch this train? Well, let's try to figure that out. First, let's take a look at the recent results. Revenue is up by 101% year over year. Net profit is up by an incredible 843%. Cash is up by 70%, and the long-term debt is down by 12%. So the last 12 months were really great for Nvidia, mainly thanks to booming sales for data centers and artificial intelligence. And it is more than reflected in the price of the shares. Speaking of which, let's take a look at the long-term history of this stock. If you were to invest $1,000 into Nvidia 10 years ago, you could buy around 267 shares, and today they would be worth around $129,495. So in 10 years, you would gain 12,849%. That is quite a result. They are also paying dividends, so through the last 10 years you would receive around $373 as dividends. So if we add the current value of shares and the dividends, we get $129,868. So that is a gain of 12,887% in 10 years. Not bad. But we should remember that future results don't have to look anything like the past. So the question we should answer is, can they repeat such results for another 10 years? Well, let's take a look at the fundamentals and see, is it even possible? Individual insiders, that is a check. 4% of the company is owned by individual insiders. And we would like to see this number over 2%, so we know that the management has its skin in the game. And are individual insiders buying? That is an X. They sold in the last year over 1 million shares and did not buy a single share. Now, that makes you wonder. It certainly looks like insiders believe that it is a good time to sell. And do super investors own this company? That is a check with 9 super investors, and 7 of them became investors in this company in the last 2 quarters. And are super investors buying right now? That is a big check. In the last quarter, they bought over 2.9 million shares and sold less than 200,000 shares. So it seems that super investors believe that this upward trend will continue. Return on invested capital. That is a check at 21.8% 10-year median returns. And we want to see this number higher than 10%, so the return is really nice. And free cash flow growth? That is a check at 19.5% 10-year compound annual growth rate. And also here, we want to see this number over 10%, so it all looks really good. And what do we know about net profit margin? It is a check at 31.6%, and the industry average is 22.7%. So right now, Nvidia has a really decent pricing power over their competitors. And now let's take a look at share buyback. It is an X with 3.8% new shares issued in the last 10 years. But just recently, they announced plans to buy back shares worth around $25 billion. And usually I like when a company is buying back stock, because when there are less shares available, then every share that is left is worth more. But when the stock is so expensive, it just does not seem like a great idea. They could probably use that money in a better way. For example, they could pay back debt. So let's take a look at it. It is a check. It would take less than a year to pay the long-term debt with a current free cash flow. So that is a very nice result. The dividend yield is 0.03%. So in the last 12 months, shareholders got 16 cents per every share through dividends. And the payout ratio, that is an X at 3%. And we want to see it somewhere between 20 and 50%. So it is a small and safe dividend. It is only 3% of their earnings, so it's nothing significant. And what do we know about the dividend growth? It is a check at 1.6% annual growth in the last 5 years. So we get a small, safe dividend that will probably grow very slowly. It's not bad, but it should not really influence our investment decision in this case. Unless, of course, they will grow the dividend substantially because of the recent exceptional results. Before we value Nvidia, I just wanted to let you know that if you want to get all the data that we discussed on this channel about all the companies that we analyzed, then you can become a Patreon for just $5 and get access to our stock ranking that gives you this bird's eye view on all of the companies. And of course, you are also supporting this channel that way, so thank you for that, and I hope you will find it valuable. Now, back to the valuation. Price to earnings ratio is 119. That means that for every dollar this company earns currently, we have to pay $119. And just to compare, Tesla has a PE of 72. Microsoft has a PE of 33, Apple 31, and Google 29. Just to put things into perspective. But to properly value it, we will have to estimate the growth of Nvidia for the next 10 years. And we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 15% for the first 5 years and then 13%. In the medium, 18% and then 15%. And in the high scenario, 22% and then 20%. Now, why did I use such estimates? Well, if we look at the 10-year annual growth rate, we see that the revenue went up by 20.2%, free cash flow by 19.5%, and earnings per share by 22.7%. So you may say I am conservative and that the growth can be well over 20%, and you may be right. The low scenario is probably conservative, and that's the way it should be. Medium, I think, is realistic, that they will struggle to keep the same results they produced in the last decade. And the high one shows the situation in which they continue to grow at the current pace. Can they grow faster? Of course. I just don't think it is very likely that they can do that for another 10 years. So with such estimates, the intrinsic value in the low scenario is $132, in the medium scenario $159, and in the high scenario $220. But these are not the prices we should be looking for, because we should add a margin of safety. I always use a 30% one. So with such a margin, we get in the low scenario $92, in the medium $111, and in the high one $154. And the current price is around $485. So it is all in the red and by quite a big margin. And of course, I may be too cautious, but let's listen to one of the greatest minds in valuation, Aswath Damodaran.
Aswath, what is Nvidia worth?
Now, my estimate, it's worth about $240 a share. But I mean, let's start with the good news. I mean, this is an amazing company. It's a company that's managed to find markets just ahead of growth. and kind of dominate those markets, gaming, crypto, AI. At this stage, you've got to view them as an opportunistic company, a company that manages to do this over and over again. Is not just lucky. That's the good news. The bad news is when you're pricing NVIDIA at 450, $500 per share, you're not just assuming that they will dominate the AI market, even if it's a big market, but there are other markets out there that we don't even know about yet that NVIDIA will find a way to dominate. Could that happen? Yes, but I'm not going to pay upfront a premium price on the assumption that they will find markets that are undiscovered and dominate them.
So he believes the right price is actually a bit higher, around $240, but still, it is a long way off the current price. So we have a situation in which insiders are selling and the valuation is high. But at the same time, a lot of super investors are buying and the growth potential is definitely there. And as Charlie Munger says, anyone that thinks that investing is easy is an idiot. And this situation is certainly a tough one. It seems that it is too late, but the market may stay irrational for a very long time and the price may just keep on going up. But then, are we still investing or are we just speculating? Tell me, what are your thoughts on this situation? Is it too late or is it just the beginning? Thanks for watching and see you in the next one.